Hello and welcome. I'm Suyash Maheshwari and you are watching News 9 Live. As the Festival of Light approaches, stock market enthusiasts have something more to celebrate, and that is Muhurat trading. Now, this annual event marks the start of the new Hindu calendar year or Samvat, and Muhurat trading isn't just any other trading session. It symbolizes new beginnings and prosperity. Now, this tradition has been around for decades, and investors eagerly participate in this 1 hour session, believing that trades made during this auspicious time will bring them good fortune and positive returns for the coming year. For 2024, we'll usher in Samvat 2081 on November 1st. Now, this year, Muhurat trading will kick off at 6 p.m. on November 1st, which is Friday, and wrap up by 7 p.m. And let's look at some numbers. Now, investors often track market performance from one Diwali to the next, and the results, if you look at it, they are quite encouraging. Between 2014 and 2023, 8 out of 10 Muhurat sessions yielded positive returns, showcasing the festive spirit in the market. Over the past decade, benchmark indices like the Sensex and Nifty 50 have averaged returns of about 11 to 13% from one Muhurat to the next. However, as we step into Samvat 2081, the market is facing some challenges, especially the Indian markets. We are entering this new year amid global uncertainties, from the upcoming US elections to renewed tensions in the Middle East, plus a rebound in China's equity markets, which is attracting foreign funds away from India. Now, these factors could influence market sentiment here at home. In the first half of the show, we'll discuss what to expect from this year's Muhurat trading, which sectors look promising, and much more. Later in the show, we'll explore next-gen investing, how it differs from traditional investments, and what instruments do the millennials and the Gen Z investors out there prefer, and what's their risk appetite. But let's welcome our first set of experts. Joining us on the show now is Kranti Bhatini, Director of Equity Strategy at Wealth Mill Security. Kranti, thank you for giving us time here on News 9. First of all, wishing you and your family and your team a very happy Diwali. Now, Muhurat trading is one of those events where many people begin their investing journey. And, you know, I remember back in 2018, it was during Muhurat trading only that I bought my first stock. So, for the investors out there who are looking to enter the market on this auspicious occasion, and let's say they have about 1 lakh rupees to invest, how should they allocate the capital?
First of all, Suyash, thank you for inviting me on your special show, and I wish you all and your team at News 9 a very and prosperous a happy Diwali. Yeah, first of all, a new entrant who is coming into the market. Markets have been roller coaster last fortnight and all. It's given good opportunity for the investors. For the new investors, when they are coming into the market, their normal tendency is look into the stocks which are very low value. Okay, they think that the valuations are low. When they see the price of any stock is low, the normal tendency is they look for the valuations are very low. But it doesn't matter what price they are paying for the stock, but valuations should be attractive, and also the company should have a good high growth prospects and also good corporate governance. These are the primary things one should keep on their radar before venturing into any kind of new investing. Most probably for the new investors, they come up with a idea that in stock market, when they buy the stock, the chips prices will go up immediately. But in majority of the cases, it's not the same case. Okay, normally when we buy, post that only the prices will come down. So if they buy good chips, good stocks, good companies, which are going to do well with a strong management, those companies' shares they can accumulate. In most of the cases, the new entrants, they buy some shares which are penny stocks. Normally, the tendency is, okay, it's just like lottery tickets. They try to test their luck. Whereas investing is a process. They need to understand the fundamentals of the company. For the new entrants, the best way to start is direct stocks I'm talking about. Best way to start with good growth drivers of India, the large cap stocks. They give margin of safety for them, and also they're stable in nature. Until the time they understand the market cycles and also the fundamentals, how market behavior works according to the earnings expansion, So till the time, better to be in large cap and high quality mid cap stocks, not venturing into the penny and micro cap, or people get attracted with the looking at the price of that particular stock. So as a word of caution, right now the markets are volatile, but still the large caps looks very attractive for a new entrants who don't understand the market, a novice investor starting from this Diwali. Stick with the large cap until unless they get the knack of understanding the markets.
Markets are a bit shaky, but large cap stocks are looking attractive. Let's also bring on board Amar Deo Singh, Senior Vice President of Research at Angel One. Amar, first of all, season greetings to you, your family, and your team, sir. What are you expecting during this 1 hour of Mahura trading this time around? Can we expect any major moves on either side? Now, October especially has been a volatile month. Do you expect that volatility to creep in during Mahura trading? Amar, I think you are on mute.
Yeah.
Yeah.
So if you look at Muhurat, we have to understand that there's volatility, something which we all have to live with, and that's sometimes good, that's sometimes bad. But overall, if you see, we definitely, as I was listening to you earlier, and you've put in a very good statistics as to the Muhurat trading. Out of 10, 8 have been positive, and overall, you see as a country also, and the way the markets have grown. Despite so many challenges coming up, despite elections, despite upsets globally, also in terms of geopolitical tensions, markets have been quite, I would say, favorable. If you look at from a long, because short term you see a lot of chaos, short term you see a lot of volatility, a short term you see a lot of sentiments being played out, but over the long term, it's the key drivers which really are the fundamental drivers which actually deliver from a long-term perspective. So having said that, we definitely would witness volatility on the Muhurat trading day as well, but that's subdued volatility. But at the same time, every correction is a buying opportunity because if you look at India from a long-term perspective, we are far better placed than most of the countries, and we have a long way to go. And the best part is now manufacturing has also started kicking in a big way, apart from infrastructure, apart from defense, power, renewables. So we are now, apart just from being a services oriented economy, we are also now getting into the manufacturing space, because that is where we really have to double up and we have to strengthen and build our position. And the best part is that a lot of the European world and US are leaning or are okay, or they are fine moving to India, provided we offer the competitiveness, because it's ultimately a choice of business opportunity, and also the competitiveness which is being offered because China works at a different scale altogether, and we are a far cry from there. But the more we are able to offer this opportunity for the different manufacturing space, we need to become a manufacturing hub. And coming to the volatility, that's there to stay, no doubt about it, no running away from it. But if you look at it from a long-term perspective, it evens out, and volatility, I would say, is good for the markets.
All right, Kranti, I'll come back to you, and keeping it with, the first time investors, you said they should right now at least focus on the large caps and not dabble too much in the small caps and the micro caps. But, what are the common mistakes do first time investors make, and how can they, how can they avoid them when they are starting their investment journey this time around on Mahura Trading?
The first and foremost is they need to make the trend as their friend. Okay, and one of the important quality investors need to inculcate is the flexibility is very important in the market. Everybody do mistakes in the market, but learning from the mistakes is very important. The wise person learns from their own mistakes, but the smart person in the market learns from the other's mistake. So one need to be smart. Sometimes one need to be wise in the market. That is the best quality one need to inculcate. Nowadays, there is a lot of social media buzz and all. Lot of when we started our careers in stock markets back in more than a couple of decades back, the biggest problem was the lack of information, and the information was very less. And now we are living in a digitalized world. We have too much information today, right now. So one need to differentiate the information and market parts and the right information. I don't know how many investors, okay, when they buy any stock, take the time and effort to read at least the annual report of the company. Tracking every quarter results is different, but tracking at least what this company is doing, what they are into, what is their prime objective. These are the basic information one should know before taking any investment decision. Just simply looking at the price and the price action and the momentum in the market, definitely sometimes market has been so kind, without knowing all these things, one makes money. But it's not all the case. If an investor want to be a long-term successful investor, want to create wealth in the market, they need to inculcate taking out the time, just understanding the company, how the business model, how the cash flows, and how the company works, and what are the positive factors for this company, and how this company behaves, taking the advantage of good times, and also how this company is managing the bad times. These are the crucial things one need to understand. Otherwise, one becomes a seasonal investor or a just pure playing with the momentum. But whereas if you see, the other guest completely told, one need to inculcate the habituate spending time with the volatility in the market. So if a person is a long-term investor, nothing to worry about the volatility in the market, and the wealth can be created over a period of time, staying invested in the market, getting habituated to volatility, and also the cyclicality of the market.
Right, right. All right. I mean, for the first time investor, I think they have plenty to take away from here. You know, how you can start your investing journey, what should be the sort of commandments that you can follow to, you know, make sure the investing journey comes without hurdles. Amar, I want to come back to you. What are the sectors and stocks do you think that could stand out, you know, in the next year, and why should investors keep an eye on them?
Yeah, I would say that there are different sectors which one can keep a close watch on. I would say it could be one is capital goods sector, then consumer durables, finance, FMCG, gas distribution, IT, pharma. So these are some sectors which one can definitely keep a close watch on, because ultimately, if you look at these sectors which I've talked about, like IT for the matter, IT, we've seen some very good move if you look at the Nifty IT index, that's delivered extremely strong returns over the last couple of years. And with the US election also now very close, we'll have to see how that really plays out. But still, there's a lot of opportunity for IT companies and those who are basically able to leverage the power of AI and who are able to leverage, I would say, with the leverage the advanced and the latest technologies, or keeping themselves upgraded with the technology, because there's a lot of scope for Indian companies. So it would be those who are more alert and more, I would say, aggressive in that sense. Apart from that, pharma is another space which we are quite bullish on. So, but it's also, one needs to remember when I'm talking about pharma or IT, it's not that all the companies, but it will be specific few companies in this sector. Apart from that, you've got consumer durables, you've got NBFC, so you've got finance and FMCG. So these are few sectors which one can keep a close watch over the next year.
Right, right. Words of wisdom coming up from our experts. Kranti Bhatini, Director of Equity Research at Wealth Mill Security. Amar Deo Singh, Senior Vice President of Research at Angel One. Gentlemen, thank you for giving us time here on News 9. Again, season greetings to you. Have a very happy and a prosperous Diwali.